Welcome to the Lend Academy podcast, episode number 284. This is your host, Peter Renton, founder of Lend Academy and co-founder of Lendit Fintech. Today's episode is sponsored by Lendit Fintech USA, the world's largest fintech event dedicated to lending and digital banking. Lendit's flagship event is happening online this year on April 27 to 29, with the possibility of an exclusive VIP in-person component. The verdict is in on Lendit's 2020 event that was held online, with many people saying it was the best virtual event they had ever attended. Lendit is setting the bar even higher in 2021. So join the fintech community at Lendit Fintech USA, where you will meet the people who matter, learn from the experts, and get business done. Sign up today at lendit.com/USA. Today on the show, I am delighted to welcome Ram Palaniappan. He is the CEO and founder of Earnin. Now, Earnin is a really interesting company. They've got a unique model that Ram gets into in some depth. They basically offer an earned wage access product for people who want to access money that is actually rightfully theirs in many ways, access the money before payday. So we talk about the types of people, the types of use cases we have, how the model works, and then their very interesting way of generating revenue, which is all primarily based on tipping. And so that is that's a really interesting conversation in and of itself. And Ram also gets into what this population really needs and how companies like Earnin are really becoming their sort of core financial product. It was a fascinating interview. Hope you enjoy the show. Welcome to the podcast, Ram.
Thank you. It's great to be here.
Okay, so I'd like to get this thing started by giving the listeners a little bit of context and some background. And you've had quite an interesting career. Why don't you give us some of the highlights of what you've done before Earnin?
Sure. So prior to Earnin, I was running another payments company that was also trying to help people who were in the same customer segment. Mm-hmm. So that's helped me a lot with understanding what our customers go through, how difficult their life is, how expensive it is to be poor. It's also given me a really good understanding of how our payment system works and how the banking system works. Mm-hmm. So I think all of those have really informed the work that I do right now.
Right. Okay. So then, and was there something specific that, what was the idea that kind of led to the founding of Earnin?
So I never really I didn't really set out to start a company. What happened when I was at my previous company was I noticed that some of my employees were running into overdraft fees and payday loans. Mm-hmm. And that didn't make any sense to me because I thought I was paying everybody well.
Right.
I spoke with one of them. The problem she had was that she needed money the next day. Couldn't wait till the following Friday. From my point of view, she'd already worked for half of the week. And so we already owed her money for the work that she had done. And I tried to get our payroll system to pay her, and I couldn't. So I was like, not bad. I'll just give you the money now. And when ADP finally gets around to doing its stuff, you just pay me back. And so I ended doing that for a handful of my employees for several years. Mm-hmm. And then I left the company and I moved over here to the Bay Area. And the people who I was doing this for, they want to know if I'd still do it for them. And I didn't mind doing it. These are people who I'd see in the office every day. And so I continued to do it for them and initially started off with them sending me messages on Instant Messenger. And at some point I realized that was not going to work very efficiently. So I built a really simple web form and then I just had them fill out the form whenever they needed money. And then what happened was people who I didn't know tried to use that web page. I was like, right. Okay, this is more interesting. Let me see if I can do it for them as well. And what I realized was that when someone has access to their pay when they need it, their life is much simpler. Mm-hmm. They're paying all their bills on time, no more late fees on bills, no more overdraft fees, no more payday loans. And that's when I realized that if I didn't try to make this into a product, I'd always feel bad about myself.
Right.
And so that's how it started. And clearly the need was not just the people who I knew. There's a lot of people who can't wait till payday. And the whole concept of paydays is really fascinating. Till a few centuries ago, people were paid every day.
Right.
It was during the Industrial Revolution that we moved to where we would pay people either 2 weeks or on a monthly cycle. And if you think about it as an employee, you'd rather get your pay 2 weeks before you work. Your employer would rather pay you 2 weeks after you work. And the fact that today, like every employer pays people 2 weeks after they work, and we don't even question it, shows you like how much that balance of power has shifted away from people to companies.
Right. That makes sense. And so, and like, I guess, you've really focused on a certain population here. Maybe, maybe before we get into that, why don't you just tell us how your product works exactly today? And obviously you've already broadly sketched it out, but maybe just talk about exactly how the earned wage access piece works.
Yeah, sure. I mean, so we have an app, and the app is available on Android and iOS, and it does a number of different things. One of the products that we offer is what's called earned wage access. And the way that works is once you set up an account, you'll be able to see how much you've earned in real time. So as you work, you can see how much you've accrued in earnings already. And then if you want that, you can transfer it into your checking account. And the money shows up in your checking account almost instantly. And then you would spend that with your bank's debit card. There's no fees, no interest. We let our members pay us what they think is fair. But that's essentially how it works. It basically takes you out of having to wait for your payday and lets you access your pay whenever you need it.
Okay, so how do people set it up? Do you verify that what they're saying is actually? Do you go into their bank account to make sure they're saying, "Hey, I earn $60,000 a year," but actually they're earning really less than that? How do you verify that?
Yeah, so the bank account is one part. The other piece that we have built into the app is very much like a time and attendance system.
Mm-hmm.
And what that lets us do is know how much somebody has worked every day. And so it's very similar to a modern time and attendance system like T-Sheets from Intuit. We have similar technology. We can basically construct what someone has earned since their last payday as well.
Okay.
We use that to basically construct what we call the earnings account.
Right. And so then they go into their app and they get a real-time view on how much they've actually earned. I mean, it's a receivable right now. It's not cash, but they it's also payable to them. They can go in and then what can they take out of that? I mean, they can't take it all out, I imagine. What are some of the parameters?
Yeah. And so I think you got it correct that they can see what they've earned till that point in time. And that's actually the primary use case of the apps. People want to know what they've earned right now till this point. That helps them budget as well. And we get over 25 app opens a month is because people come in to just see how much they've earned till that point in time. And then we let them take out a part of that. We limit it to $100 a day.
Mm-hmm.
And typically it's also limited to about $500 a pay cycle.
Okay. And then what is the primary use case? I mean, is it, is it groceries? Is it rent? I mean, what are the use cases that people are doing this for?
Yeah. So the biggest one is food and groceries.
Right.
People also use it to buy gas, using it to pay their bills. Utility bills are a big one.
Mm-hmm.
Using it for rent, and then to avoid overdraft fees.
Right. Okay. And did you see that? I mean, how much do you notice that? Because if you've got insight into the bank account, you can probably get a pretty good idea. I mean, do you notice overdraft fees going down, payday loan applications going down, that sort of thing?
Completely, yes. So you see overdraft fees going down. Our customers, if they didn't have our app, they would incur about 4 more overdrafts a month. They also tell us that their late fees have come down.
Mm-hmm.
They tell us that the late fees have come down by about $55 per month. And so they're paying their bills on time. The other really interesting impact that we see is attendance goes up.
Right.
And when attendance goes up, your income goes up as well. And so we're seeing that once someone starts using our app, attendance goes up, income goes up, and it goes up by about 8% over 6 months.
That's interesting.
It's amazing. And one of the mechanics by which that happens, which I thought is really interesting, is around gas.
Mm-hmm.
So our members typically buy gas $5 or $10 at a time.
Right.
They can't afford to lock up $50 in their gas tank.
Mm-hmm.
And now, if something happens before payday and they can't buy gas, and they would have missed work. Mm-hmm. But now with the app, they can access their previous day's earnings, buy gas, and then go into work, and they don't miss work.
Mm-hmm. Mm-hmm. That's really interesting. So then, what? I mean, this is earned wage access. I was on your website just before we came on here, and you got some interesting other products. So why don't you tell us a little bit about sort of what you're trying to do holistically, just beyond just the earned wage access product?
So what we're trying to do is build new types of financial products that get people to a better place financially. Mm-hmm. And so earned wage access is one of those, and we're seeing a huge amount of savings come from that. We also have a product called Balance Shield, which lets you set up alerts on your checking account so that when you're going to run low, you know when you can either pull back on your spend or you can access your earnings to avoid overdraft fees. We have another product, Tip Yourself, that helps you put money aside. You can either put money aside to cover rent, or if you want to plan for something longer, you can set up some kind of goal on to hit. And we see that about 85% of our members are using that service, actually setting up recurring automatic movements into to keep money aside for their future. We also have another product called Cashback Rewards. Mm-hmm. This is very similar to Cashback Rewards on a credit card. So if you have a good credit card, you get 2% cashback on your purchases. And so that's like a subsidy on your purchases. Now, the ones who really need the subsidy are my members, and they don't get those credit cards.
Right.
So what we've done is we've de-linked the reward piece from the card piece, and so you can continue to spend with your bank's card. And we have a network of merchants. If you spend any one of those, they will give you cash back. And the cash back sits in the app, and whenever you want to, you can pull it down into your own account.
Interesting. So you're signing up merchants to just provide your population with a special deal. I mean, that's super interesting. I mean, like, how is this fairly new? I mean, how big is this program?
So it's recent in that it's I would say like our next generation of products. After the first one that we started off with was the earned wage access, and we have a good part of our members actually use that. It's not going to be on every transaction because it's for a certain set of merchants, but most of them are enrolled in this, and when they go to those merchants, then they get the reward back.
Mm-hmm, mm-hmm. Right, interesting. And I remember I went back and watched your session at Lend at Fintech USA last year, and you talked about community, and it was a really interesting point that you made. And you gave these great stories about different. I think it was a plumber in Florida or somewhere where they're helping each other out. Just members of the Earnin community helping other members out. And I mean, this is something I think many fintech companies would love to emulate. I mean, how have you kind of fostered that sense of community?
Yeah, so it starts out with one of our core beliefs, which is, I think like society would be much better if we were all helping each other instead of everyone being isolated and independent. And we're trying to build to that future, and we try to build to that future through our product, where we have many peer-to-peer interactions. We let our members help each other. We let them send messages to each other. And we're seeing that behavior shift into other areas like what you said with the plumber. We've seen a lot of this happen, particularly since COVID, where our members are helping each other find government assistance, get on to unemployment, understand what's happening with the stimulus checks. So we're seeing a lot of like people helping each other out. And particularly in the beginning of COVID, we saw people, when people lost their jobs, it was a sudden shock. They were sometimes struggling to find meals. And you could see the community like buying Uber Eats for another family. Like there was a lot of this kind of like people helping people happen. And the plumber, Richard, his story is also really interesting. He had much less work to do during COVID. And one of our other members had a sink that was flooding, was fairly close to where he was. And so he went and helped her. And then she thanked him on one of our forums. And then there was another lady from Georgia who said her sink was also clogging, and she was at home with her daughter and her grandson and wanted to know if there was anybody close to her who could help. And Richard offered to go down to Georgia to help. And so a number of our members pulled together to pay for his gas. He went over to Georgia. He needed to get some parts, and so he had to stay overnight. 4 other Earnin members pulled together to pay for his hotel room. And then he fixed a sink the next day and came back.
Right. That is a great story. And it really, it's sort of, to me, it gets to the real heart of fintech and what the promise is. I mean, the promise is obviously, bringing people together who would never have met, never have, any reason to know each other, but through the sort of the connection through their phone, most likely.
Yeah. It's also, I think, interesting to like recognize the challenges that come with that, because we've never previously in financial services contemplated people helping each other.
Right.
How every product is defined, whether it's in regulations or otherwise, it's always been institution to individual.
Mm-hmm.
It doesn't contemplate people interacting with each other and like making a product work because of those peer-to-peer interactions.
Right.
Like the concept of people helping people is not really, we haven't built products around people helping other people.
Right. Or regulations for that matter. We haven't really imagined a world like that. That's super interesting. So then, and maybe I'd love to get a sense of the size you guys are at. Like how many members do you have right now?
Yeah. So we have a few million members. We have employees. So all of our members are employees of some company.
Mm-hmm.
We have employees from about 350,000 different companies. About 100,000 of those companies have less than 25 employees.
Right.
So we have quite a few small business employees as well who are using the product. Many who work for the government. So think of TSA agents. We have lots of teachers who use it. But lots of people who work in like grocery, retail, call centers.
Mm-hmm.
And so it's people who are working hard but are bearing the brunt of the pay cycle.
Right, right. And so how important is it for you to have this business model that's focused around tipping rather than, charging a fee, as is most businesses charge fees? You can offer this for free to your members. Is that like a really core piece of who you are as a company?
Yeah. So I think if you look at financial services, it's always been like all of the control has been very centralized. Mm-hmm. Like the bank decides how your products are, and you passively have to accept that. Your employer decides which your pay cycle is. You have to accept that. And our members are always at the losing side of anything financial.
Right.
And we're trying to build it in a different way where rather than being passive recipients of the product, they're active participants in the product.
Mm-hmm.
And so that's what we're trying to do. And I mean, if you think of it, like a bank charges $35 for an overdraft fee. That erodes trust.
Right.
With what we're doing, where we're letting our members choose to pay whatever they think is fair, that actually builds trust.
Mm-hmm.
And so it's a very different type of product when you actually put the customer in charge instead of dictating to the customer what happens.
Right. Right. And what percentage of your customers pay something, even if it's a very small amount?
So most people pay something. They may not pay every time.
Right.
And it depends on what the situation is. But at some point in time, most people pay something to support the service.
Right, right. And then is this your only source of revenue? Is the tipping really the only way because you obviously you have employees, you've got bills to pay, you need to create a sustainable business. I mean, are there other sources of revenue?
Tipping is the main way in which we sustain ourselves. There's a little bit that comes out from the cashback offers where the merchants will sometimes give us a little bit as well.
Right. Okay. But obviously, I mean, you've been doing this now for many years and so the tipping, I mean, you've got it's so funny, or not funny, it's antithetical, I guess, to most businesses where it's a fee for a service and that's how businesses operated for millennia. But you're sort of turning that model. I mean, do you think this is the tipping model something that you think can work across businesses?
I think it depends on the type of business. If you look at what we're doing, we're dealing with money that is digital. Mm-hmm. And it's much easier to do this with a digital product than with a non-digital product.
Sure.
And one of the pieces that's really important to make this work is to keep your costs really low.
Right.
Because everyone is going to look at what their alternatives are, and then they'll pay you based on that. They're not going to pay you more than what it costs somewhere else. Mm-hmm. It's almost by definition, this will monetize lower than all of the other alternatives that somebody has. So the key really is to make sure that you can run this really efficiently. Mm. And that's where our ability to understand someone's earnings actually helps us a lot. Mm-hmm. You want to do this the way everybody else does, which is let's hope that it will all work out. And because it may not always work out, they're going to have much higher amount of cost. And that's why it becomes expensive. So I think like our technology gives us a huge advantage, which then lets us do this in this type of model.
And I'm also wondering if you get more of a positive selection on you've got to underwrite these people, right? Because you're not going to, I mean, I imagine, and maybe you tell me, but I imagine you don't do this to every single person who requests it. But the fact that you've got a tipping model, how does that sort of impact the way you underwrite the people who are coming on your platform?
There's no connection between the tipping model and the underwriting. The underwriting essentially is figuring out if somebody is working and earning money or not.
Okay.
But what it does, though, is we are always the best option for anyone.
Right.
And so when they're prioritizing where they want to be in good standing, we're going to be on the top of that list because all of the other alternatives are not favorable to them.
Right. Right. Okay. And so then are they, I mean, do you have, because you're taking on risk, right? You're taking on some risk because you don't know whether they could get fired from their job the next day and not be able to pay you back. I mean, do you have some stats on kind of how much, what the losses are that you've gone through over the course of your operation?
Yeah. So we do have some risk and some loss. And in the one which you describe where someone loses their job, the risk really is that we did not correctly recognize that they lost their job. Because we're trying to figure out your earnings continuously during the day. And if you stopped working, we should be able to pick that up. And so it's really very, very minimal. And in terms of scale, some of our large costs really are things like moving money up and down. So we move money almost instantly into people's bank accounts.
Mm-hmm.
We send that over the network rail. So we use the ATM networks and we send it backwards. And those have costs, and we cover all those transaction costs.
Right.
We also have access to capital that we pay for in order to be able to fund these.
Mm-hmm.
So we have those costs, and actually those costs are quite material. And the risk piece, while it does exist, it's far lower than what you would expect if you would look at alternatives that our customers would go to.
Right, for sure. Okay, I get it. So then I'd love to get some sense of how this model that you've created. I know you're not the only one doing tipping. Obviously, there are others that have a similar approach, but you're certainly, that seems to be the largest in doing this. Can you comment on, I think one question I've always had is, are you a profitable business? I mean, is this really something that has long-term potential as a business model?
Yeah. So it's an interesting question. When I was starting this, it was a choice that I had to make was, do I try to structure this as a for-profit or a non-profit?
Right.
And having seen what happened in 2008, 2009, which was the previous crisis then where the same customer base needed a lot of help, what I found is that was when the nonprofits could not raise money. It was when people needed help the most, was when it was most difficult to raise money. Mm-hmm. And so it's not the greatest way to help people who are going to be impacted during a downturn. And so to me, the way to make this work was to structure it as a for-profit.
Right.
And I think what we're seeing is that for many people, we're becoming the default financial app. There's not that many financial apps that you open 25 times a month. Mm-hmm. In fact, it's really interesting in that if you would look at your bank account, most days you'll see what you're spending, and only twice a month you'll see money coming in.
Right.
So you get the good news twice a month, you get the bad news every day. And what we're trying to do is show you how much progress you're making every day.
Right.
To me, the other piece that's fascinating with this is, as a business, I know what my revenue is every day. Every day I know what my revenue is, but only at the end of the month do I know what my costs are.
Right.
Whereas as an individual, I know my costs continuously, and I get my revenue at the end of the period. Mm-hmm. It's just interesting how the world is just so different for a business as compared to an individual. But what we're really doing is building what I think is a much better way for people to manage their money. They're budgeting much better. When you're able to synchronize your income and your expenses, your life is much smoother. Mm-hmm. Just think of what happens on payday otherwise. You get there's lots of studies on this, but when you see money come in a large amount, on payday, you feel like you have a license to spend.
Yeah.
And then your discretionary expenses are what goes up. Mm-hmm. But if you were to get money more continuously and you can synchronize it with your income, you actually get much better at managing your money. And it's a little bit like moving from batch manufacturing to just-in-time. Mm-hmm. Manufacturing figured this out 60 years ago, but when they were doing batch manufacturing, there was a lot of wastage because you would manufacture in batch, and if the quality wasn't good, you'd throw things out. But when you move to just-in-time, everything worked much better.
Right. So that brings to another question here, because I think I'd love to get your perspective. Is it inevitable, do you think, that the way that people are paid, particularly W-2 type wage earners, it just feels like to me the weekly, bi-monthly, monthly pay cycle, whatever it is, it's an anachronism from when we got paid in cash and when things were manual. Now it's just all technology. And I mean, ADP could pay every one of their people every day if they so chose. It's just a software issue that's actually pretty trivial when you think about it. So is this, what's your vision for the future of people, of wage earners? Will we, in 25 years time or 20 or 10 years time, will everyone just get paid whenever they want?
Yes. I don't know if the time is that far out.
Okay.
I think we'll be able to people will get used to getting their pay whenever they need it. Before that, I think we're going to question at some point, like, how did we ever accept
right
that companies can hold our pay for 2 weeks?
Yeah, because I mean, you need the money more than they need the money most of the time, anyway. But
exactly. Yeah. Mm-hmm.
Yeah. And so where does that leave Earnin if ADP switches to daily pay or switches to on-demand payment, which is probably more what you're offering?
Yeah. So we already do on-demand pay, and so I think like that might be the way in which employees finally get to getting their pay whenever they want.
Right. But so if ADP does it, where does that leave Earnin?
Well, we're already doing it. And so like we're already having customers who are doing it. ADP has to move to do this.
Right.
Catch up to where we are. But I think like ADP will be another player in this space. And whichever product the consumer likes the most should be what they use.
Okay. So you just feel like I see what you mean. So, because obviously not everyone's using ADP. I mean, you talk about there was a lot of your members are for 25 employees or less, and many of which are just using, one of like a QuickBooks or something. So,
and it should be the employee's choice,
right?
And like we're trying to do things from the employee's point of view. Like we're building ways for them to put money aside. We're trying to help them get some money back from the merchants where they shop.
Mm-hmm.
And I think eventually this moves to like what is a consumer first approach. And quite often the more traditional payroll companies will be looking at what their customer, who is the employer, not the employee, wants.
Mm-hmm.
And what we try to do is build what the employee wants.
Right. I got it. So then I want to go back to something else you said. You said that just a few minutes ago that, you talked about becoming a nonprofit because when times are tough, they find it hard, that nonprofits find it hard to raise money. Times have been tough for the last, 10 months. I mean, I know that for probably a lot of your community, they had stimulus checks to fall back on, but I'd love to get a sense of like usage of your app. Did it go up? Did it go down? What happened during the pandemic?
So the two things that we saw during the pandemic was there was a huge loss in jobs.
Mm-hmm.
And we've seen some amount of recovery after that, but pretty uneven recovery. And then we saw bank balances go up in April with the first stimulus check. And we've actually been following how the bank balances have been trending. And then we saw it again go up a little bit with the last stimulus check for 600. And we contribute our data to a group out of Harvard called Opportunity Insights. They've been working with the Gates Foundation, consulting with various governments as well as the incoming administration on policy response, because we have almost real-time insight into what's happening in people's financial lives.
Right, for sure. And then we're almost out of time, but a couple more questions I want to get to. How are you getting the word out? And are you working purely through the consumer, or are you also going into businesses? Because obviously it's a two-pronged approach you could take.
Yeah. So our biggest source of new customers is our current customers telling their friends and family about it.
Mm-hmm.
We also do have employers who tell their employees about it. And some of that is through where we're partnering with the employer and helping them with the communication. Mm-hmm. Some of that is much more informal, where we know in many, many stores, people who work at the store will go to the manager to ask for an advance. The manager knows about our app and just tells them to download the app and use it. And so some of it is without us working officially with the employer, and some of it is where we have a relationship with the employer.
Right. Okay, interesting. Okay, so then last question then, as What are you, there's a lot of ways you can take this. Obviously, you've got a very engaged customer base. You could, you talk about sort of you're becoming the primary financial app that they use. I mean, what's next for Earnin? Where are you taking this?
So I think we're continuing to build new types of products. I think we're really proud of what we've been able to do already, the impact that we've had, whether it's on wages or people saving money. Another really interesting stat is that about half of our members who could not previously afford $400 in emergency are now able to.
That's great.
So like you hear about the $400 problem, when people start using our app, that solves quite a bit of that. But there's still so much work to be done. Like the income gap is huge, the wealth gap is huge. And many of these are because of the way the system works. And so we're still like working on products that will help address these. Mm-hmm. But it's very expensive to be poor. It's because the way the system works against them. There's just so many problems that still need to be solved.
Right. Yeah, no, that's very true. Well, it's a noble mission, and really appreciate you coming on this show today, Ram, and best of luck to you.
Thank you.
Okay, see ya. I just want to go back to what Ram said a minute or two ago, which I find just really fascinating, that he said around a half of the members that had trouble with a $400 emergency expense now are okay with that. And I think that, to me, that alone, I feel like, is a reason to get excited about what fintech is bringing here. I mean, he said something several times, and it's a cliche almost, that it's expensive to be poor. But it's also true that these people pay so much more in fees. They struggle to avoid late fees and overdraft fees. And if you provide them with a better product that is, more in tune with their needs, most of these people have money coming in. They're responsible people, but they for whatever reason, the emergency expense, they find it hard to avoid these late fees. But if you can have a product like this, where the money that is owed to them is able to be accessed. That's why it's one of the reasons why I'm so bullish on earned wage access. I think it's a great product, because I want to see payday lenders go out of business, the whole industry go out of business, not because of legislation or anything like that, because demand is no longer there, because people are using better products. And that's what I think earned wage access is. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye. Today's episode was sponsored by Lendit Fintech USA, the world's largest fintech event dedicated to lending and digital banking. Lendit's flagship event is happening online this year on April 27 to 29, with the possibility of an exclusive VIP in-person component. The verdict is in on Lendit's 2020 event that was held online, with many people saying it was the best virtual event they had ever attended. Lendit is setting the bar even higher in 2021. So join the fintech community at Lendit Fintech USA, where you will meet the people who matter, learn from the experts, and get business done. Sign up today at lendit.com/USA.